Okay, the VIX is really what I want to focus on right now. This market is clearly volatility driven. So rather than try to put up 100 individual screenshots and describe them with text, I decided to break the mold and do a video here. Right now we're looking at the 1-year chart on the VIX. You notice our level is 45.14. It's been up in this plus 40 region for several days now. I'm going to show you something else too. What I'm doing is I'm clicking on the trend line thing, and as I draw this line up showing the direction of this trend, if you look up right here, where's this angle, you'll see that it's about 71 degrees. Now, that's not sustainable. However, notice here our MACD is climbing. There's no indication that it's going to pull back. Yeah, the MACD right here is showing a little bit lower than yesterday, but not much. Our slow stochastic here is also trending up. Everything right here on the 1-year chart is saying that it wants to go higher. The only resistance level we have is here at the August 2002 high. Now, in order to get to 2002, we have to go back to a 10-year chart. So you can see where that line starts. It's right about there. But this isn't really what I wanted to show you. What I wanted to show you is I want to go to on this 10-year chart. I'm going to put it to a daily mode. And then I'm going to zoom in. You see how this is just a huge steep climb, and this is a huge steep climb. Well, let's jump in on the first time we had a climb like that. Let's look at about a 1-year period. Now here, I'm going to do another trend line. And you see back then, this line was at 77 degrees. If you look at the same area I pointed to before right here. It's about 77 degrees. Again, not sustainable. It fell back shortly afterwards. But, let's see, there we go. That's not the important part. So the time that we're looking at right here is December 2001. We all know what happened there. So with this same period, let's take a look and see what happened to the SPX, which is the S&P 500. If we go back to 2001, let's go about March. Let's grab a year. You can see that even then, through September, that's when we had a big drop and we had a climb. But that climb wasn't that great. And what it really did is, let's see, there's September 2001 right there. We got a climb, and we got another big drop. Now, the same thing happened on the Dow. So I haven't moved my cursor, and you can see that even though we had a little bit of a climb, it then followed up with another big drop before we ever picked up again. So what I'm saying is the VIX here is indicating on a 1-year chart that it's high and has the potential to go higher. When we look at a 10-year chart, we can see, yeah, there is a lot more upside. If we go back 10 full years, looks like it could be as high as 60. So just because we're up in this high range doesn't mean we're done. When we look at the charts of the major indices, the S&P 500 and the Dow, for the same period, we saw that shortly after we had a similar climb, we had a small bounce, but nothing of significance. So my thoughts right now is that we may get a bounce sometime. Probably won't be this coming week, but it might be. But it's not good. It's not every indication is, as far as I see, that there's a lot more downside in front of us. So all of that said, please do your own analysis, and if you come up with something different, I can use some encouragement. But right now, things don't look all that great.